On June 12, 2026, the most expensive company in the history of the stock market opened for trading. SpaceX. $1.75 trillion. The biggest debut Wall Street has ever seen, bigger than Tesla, bigger than almost everything on Earth. And within 48 hours, the people who bought it were already losing money. Here's the part nobody wants to say out loud. Some of Wall Street's own analysts looked at the same numbers and valued this company at $780 billion. That's nearly $1 trillion of thin air. In this video, I'm going to show you the 5 red flags hiding inside the SpaceX IPO. 5 warning signs buried under the hype. Number 5 is strange. But stay with me, because the first one could quietly wipe out everyone who bought in. Let's count them down. Now, let me be clear with you. This isn't about whether SpaceX builds incredible rockets. It does. It lands them, it reuses them, it owns the sky with Starlink. That's not the question. The question is what you're actually paying for when you buy a single share at a $1.75 trillion price tag. Because a great company and a great investment are not the same thing. History is full of brilliant businesses that destroyed the people who bought them at the top. So forget the launches and the applause for a second. Follow the money instead. Because once you see how the numbers really add up, you can't unsee it. And it starts with a price tag that, according to Wall Street's own math, makes no sense at all. Red flag number 5, the price tag itself. SpaceX priced its shares at a valuation of $1.75 trillion. To put that in perspective, that would instantly make it the 7th most valuable company in the entire United States, above Tesla, the other company Elon Musk runs. Think about that. A rocket company, worth more than the world's biggest carmaker, on day one. But here's where it gets uncomfortable. While the bankers were selling that number, independent analysts ran the math themselves. Their conclusion? SpaceX is worth around $780 billion. Not $1.75 trillion. One analyst put it bluntly. There's zero math that makes any sense whatsoever. Read that again. That is not a critic on the internet. That is a professional looking at the same company and finding nearly $1 trillion of value that simply isn't there. When the price and the math disagree by that much, somebody is wrong. And when you buy at the high number, you're betting it's not you. But the price is only the surface. Because once you ask where the actual money comes from, the second red flag appears, and it's hiding inside the revenue. Red flag number 4, the revenue doesn't come close. There's an unwritten rule among the trillion-dollar companies. Apple, Microsoft, Nvidia. They don't just have huge valuations, they have the sales to match. The smallest of them by revenue still pulls in around $58 billion a year. That's the floor of the trillion-dollar club. Now ask yourself a simple question. Does SpaceX make that kind of money? It doesn't. Not even close. Most of its real revenue comes from launching rockets for governments and companies. A fantastic business, but a relatively small one. The rest is a promise. A promise called Starlink, beaming internet from space, that's supposed to grow into the giant that justifies the price. Notice what just happened. You're not being asked to buy what SpaceX earns today. You're being asked to buy what someone hopes it will earn a decade from now. And the gap between those two things, between today's reality and tomorrow's dream, is where fortunes are quietly lost. Because dreams don't have to come true to be sold. They only have to sound believable for long enough. And that brings us to the third red flag, which isn't about rockets or revenue at all. It's about one single man. Red flag number 3, the entire company is a bet on one person. When you buy SpaceX, you are not really buying rockets. You're buying Elon Musk. He is the vision, the engineer, the salesman, and the face, all at once. And Wall Street has a cold name for this. They call it key man risk. It means that if one human being disappears, gets distracted, or simply burns out, the whole story can crack. And this is the same man already running Tesla, running a social network, running an AI company, and stepping in and out of politics. His attention is split across empires. Now think about what you're being asked to do. You're handing over real money today, betting that one person, spread thinner than anyone in business, stays focused on this one company for the next 20 years. Maybe he does. He's done impossible things before. But here's the quiet truth. When an investment depends on a single individual staying perfect forever, that's not really investing. That's faith. And faith is a dangerous thing to price at $1.75 trillion. Which leads directly to red flag number 2. And this is the one that should make any everyday buyer nervous. Because it's about who, exactly, was selling. Red flag number 2, look at who was buying, and who was selling. In that IPO, SpaceX raised around $75 billion. That money doesn't appear from nowhere. It comes from new buyers, and a huge slice of them are ordinary people, retail investors, who didn't want to miss out on the most famous company on Earth. So they bought. At the top. At $135 a share. And on the other side of that trade? The early investors. The venture funds, the insiders, the people who got in years ago at a tiny fraction of the price, finally cashing out into all that excitement. Stop and picture that for a second. The smart money, the people with the most information, were handing their shares to the least informed buyers in the room. And then the stock slid. Within 2 days, the people who bought at the open were already underwater, already sitting on a loss, while the sellers walked away with their billions. This is the oldest pattern in finance, dressed up in a rocket. Hype pulls the crowd in at the peak, just as the people who know the most are quietly heading for the exit. And yet, none of this, not the price, not the revenue, not the man, not the sellers, is the real danger. The real danger is red flag number 1. And it's the one almost nobody is talking about. Red flag number 1. And this is the one that ties everything together. Remember that gap? The price said $1.75 trillion. The analysts said $780 billion. That's a hole of nearly $1 trillion between what people are paying and what the company may actually be worth. So here's the question that matters. If it's overpriced by that much, why would anyone buy it at all? And the answer is the most dangerous idea in all of investing. It's called the greater fool theory. It means you don't buy something because it's worth the price. You buy it because you believe someone even more desperate will pay you more for it later. The whole thing only works as long as there's a bigger fool waiting behind you. And here's the twist most people miss. What SpaceX is really selling at that price isn't rockets, or internet, or even Mars. It's a story. The most exciting story in the market. And in 2026, with fears of a tech and AI bubble already in the air, stories are exactly what get bid up to insane prices right before they snap. When the last fool runs out, the gap doesn't close gently. It collapses. And the people standing closest to that $1.75 trillion price tag are the ones who get buried when it does. So there they are. 5 red flags hiding inside the biggest IPO in history. A price the math can't explain. Revenue that doesn't come close. A company resting on one man's shoulders. Insiders selling to the crowd. And a nearly $1 trillion bet that someone else will always pay more. None of it means SpaceX will fail. It means the price might. And that's a very different thing. So let me ask you directly. If you had the cash, would you buy a single share of SpaceX at $1.75 trillion? Tell me in the comments. I read them. If this opened your eyes even a little, subscribe, because the next company I'm breaking down promised to change the world too, right before it lost 90% of its value. It's already on your screen. Go watch it.